when you look at the aspect of multifamily in terms of tax advantages, what are the tax advantage of passive retirement income with multifamily real estate? What's
Sure.
it all about?
It's definitely one of the most tax advantaged incomes you can have. I always tell people, if you're making an 8% cash on cash return in multifamily, it's really the equivalent of 12 to 15%, depending on your tax bracket that you're in, because of the depreciation expense. So you can take offset the expenses and offset the paper depreciation losses on the property against your income. So you can lower the taxable income of that, usually by 90% plus on your cash flow. You can make that tax free for your investors. And then one thing we've really taken a big advantage of is the tax deferred 1031 exchanges when you go to sell a property. And we've done over 7 of those where we've rolled gains from one property into a new property that's bigger, better, tax-free or tax deferred, continue to be tax deferred into the future.
Yeah. Awesome. You mentioned 1031 exchange. Can you break it down a little bit for my audience?
Sure. 1031 exchanges is a tool that the government allows you to do, and their goal is to help you grow your portfolio in size so that someday when you pay taxes on the gains, you're going to pay them on a much larger profit than you would if you just started it. So I think of it almost like a 401k where you get to put in money tax-free in that. You take that rollover growth from one property into another. Now you have to follow a lot of guidelines as far as identifying a replacement property and keeping loan sizes the same or bigger. But it's really a tool that supercharges your portfolio in being able to go from smaller assets to bigger assets as you're successful in adding value to your properties and not paying taxes on the gain and taking that out in between. So you can defer those into a new project and keep that deferring for forever, potentially.
Wow. So there's great benefit when it comes to 1031 exchange as a tax shelter also. So that's what you're saying.
Yes, it can be a real big tax shelter. It can also help you take that growth that you've had in your equity and put it to work without taking out taxes on that. So you can keep deferring that so you can make it a bigger pile, bigger piece of equity that's cash flow. The cash flow off of that bigger chunk of equity is still covered by depreciation and tax advantage income, but you're also growing your money tax-free.
Tax-free.
Tax deferred.
Tax deferred, yeah, pretty much. You still have to pay that tax at the end of the day, but the present value of money is being, in great effect right now because, the money present right now, it's actually valuable than that which is the future, I guess. That's what that's one of the advantages that you have, I believe, so when it comes to deferring of tax.